We're all taught that America is the land of the free, the land where private property is sacred. But what if the greatest betrayal of private ownership in U.S. history wasn't an accident, but a calculated, brutal act? What if your government, the very entity sworn to protect you, once made it a felony to own the most reliable, trusted asset on Earth? I'm talking about gold. You see the national debt soaring past $35 trillion. You feel the inflation, that silent theft making your paycheck worth less every single month. You watch central banks scramble, pushing new digital currencies and talking about global resets. What if all this chaos is simply the inevitable consequence of a secret financial war America fought and lost back in the 1930s? A war against its own citizens? In 1933, President Franklin D. Roosevelt signed an order that redefined private wealth forever. He didn't just break the promise of the gold standard. He declared war on every citizen who held gold coins, gold certificates, or bullion. It was the final gold grab, a confiscation, a forced, state-mandated sale. And the single, terrifying lesson from 1933 is this: when the government needs money, your private wealth is merely a temporary loan. This story isn't just history, it's a warning. It explains why they're trying to track and control your money today. Before we dive into the chilling documents of 1933, tell me, where are you watching this unfiltered truth from? Drop your city in the comments. And hit subscribe now, because what happened next changes everything you think you know about American freedom. To understand the gold grab, you have to understand the financial leash America wore, the gold standard. For generations, the dollar was essentially a receipt. You could take your paper dollar to the bank and exchange it for a specific, fixed amount of gold. This system forced the government to be disciplined. It couldn't just print money endlessly, because every new dollar had to be backed by physical gold in the vault. If the government printed too much, people would lose faith, pull the gold out, and force the government to stop. But discipline is the enemy of ambition. Then came the Great Depression in 1929. The stock market collapsed. Banks failed in waves. People, rightfully terrified, rushed to exchange their paper dollars for gold, the only thing they truly trusted. This triggered what's known as the gold drain. From 1930 to 1933, U.S. gold reserves were being rapidly drained. The Federal Reserve was hemorrhaging its foundational asset. The government was desperate, running out of financial breathing room to fight the depression. The solution, according to the elite financial advisors, was simple and brutal: break the leash. The U.S. government needed to print money, massive amounts of it, to fund stimulus programs and bail out the banks. But they couldn't print freely as long as the dollar was tied to gold. So, they manufactured a crisis narrative. They told the public that hoarders, greedy citizens holding gold, were the cause of the economic paralysis. The lie was simple: your choice to trust gold was destroying the nation. Sound familiar? Today, we hear similar narratives about inflation being caused by greedy corporations or labor shortages, while the real cause is the central bank's money printing, now completely unlimited by gold. The stage was set for the ultimate betrayal. The government prepared to sacrifice the fundamental principle of private property for its own financial freedom. On March 9, 1933, Franklin D. Roosevelt took his first step. He declared a bank holiday, shutting down every single bank in the nation for 4 days, claiming it was to stop the panic. But this was a clever distraction. The true moment of betrayal came on April 5, 1933. While the nation was still reeling, FDR issued Executive Order 6102. This order was short, sharp, and absolute. It was titled, "Forbidding the Hoarding of Gold Coin, Gold Bullion, and Gold Certificates." The key phrases were chilling. Every person, corporation, and association was required to deliver all gold to a Federal Reserve Bank on or before May 1, 1933. They gave citizens less than 1 month to turn over their life savings. The catch? The government forced you to sell your gold for a fixed price of $20.67 per ounce. This was not a fair negotiation. It was a state-mandated fire sale. And the penalty for non-compliance was draconian: up to 10 years in prison or a $10,000 fine, an astronomical sum at the time. FDR didn't just want your money. He wanted a legal mechanism to ensure he could never be challenged again. He issued Executive Order 6102 under a flimsy World War I-era law called the Trading with the Enemy Act, a law designed to stop Americans from trading with Germany. He twisted this law, declaring the Depression itself to be the national emergency that justified seizing citizen assets. The legal receipt for this ultimate transaction, the law that gave the president the right to weaponize a crisis against your wealth, should be studied in every school. It's the playbook for asset seizure in a financial emergency. But you won't believe the name of the specific legal amendment that cemented this power: and how much wilder the final financial receipt is than you think. The grab was completed in two brutal steps. First, the government, backed by the threat of prison, effectively stole the value from the citizens who complied. They paid the fixed price of $20.67 per ounce. The government amassed approximately $10 billion in gold in 1934 value. This gold was consolidated at Fort Knox, becoming the single largest hoard of money in world history. But the real trick was the next step. Once the gold was safely confiscated, the government performed the final, most shocking act of financial alchemy, the Gold Reserve Act of 1934. This act officially ended the gold standard and revalued the price of gold from $20.67 per ounce to $35 per ounce. Think about that for a moment. The Federal Reserve had just bought all the gold from its own citizens at about $20. The very next day, the government officially declared that same gold was now worth $35. This instant sovereign revaluation created a 69% profit for the U.S. government and the Federal Reserve out of thin air. This single act of financial engineering instantly created $3 billion in new government capital, enough to fund huge portions of the New Deal stimulus programs. This was the government's first massive, clean profit from an act of legal theft. This is the ultimate lesson in sovereign risk, the risk that your own government changes the rules of ownership after they have acquired your assets. The government used the gold it seized from you to finance the very programs that were supposed to save the nation. The goal wasn't just to raise money. It was to remove the leash of the gold standard forever. This cleared the way for the unlimited money printing that now characterizes our modern economy. After 1934, the Federal Reserve's power to expand the money supply was unleashed. The M1 money supply jumped from about $19 billion in 1933 to $28 billion by 1941, fueled by the revalued gold and the new freedom to print. This entire episode serves as the blueprint for modern financial moral hazard. Then, the crisis was used to justify seizing private assets for public gain. Now, a crisis is used to justify seizing liquidity through inflation or surveilling digital assets for centralized control. The Gold Reserve Act remained largely in effect for 41 years. It was until 1974 that President Gerald Ford signed a bill restoring the right of Americans to own gold bullion, a right that was gone for over 4 decades. Today, less than 1% of global financial assets are held in physical gold. The vast majority of wealth is digital, making it infinitely easier for a future government to impose a similar seizure or, worse, apply programmability rules via a central bank digital currency. The history of the 1933 gold grab destroys the illusion of financial security. It was proof that in a crisis, the government's survival trumps your property rights. Today, the stakes are exponentially higher. The target is no longer physical gold in a safe. The target is digital wealth on an easily accessible ledger. If they could seize physical gold under the threat of prison in 1933, what stops them from freezing a bank account or applying an expiry date to a digital currency in a declared climate emergency or debt crisis? Nothing. The precedent is already established. We're required to deny that toxic, invisible capital is still permeating the system. We're required to deny that the lesson of 1933 was learned too well, that a government, when cornered, will prioritize its own liquidity over your financial freedom. We believe we're wiser now. We believe regulation protects us. But as the Gold Reserve Act proves, when the stakes are high, the rules collapse. Ponder this. Are we wiser now, or are we just walking the same path in better suits? If you believe history is not just the past, but an actionable blueprint for the future, share this video widely. Expose this hidden truth to your network. And subscribe immediately, so we can continue to unpack the hidden mechanisms that control your life and your wallet.